Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market. That is the crypto market, the stock market, the metals market, the NFT market, and whatever other market we may need to analyze to try to make some or a lot of money on the internet. Loaded up for discussion today. We've got a few interesting topics around those markets just discussed. We've got the Japanese PM winning in a landslide supermajority in the Saturday snap election. The Nikkei is up big, and we'll talk about some of those implications in just a moment. We've got the Crypto.com CEO launching AI.com after $70 million crypto domain purchase. Crypto and AI coming together in that way. We'll talk through some of that. Legendary will be looking at both of those. And then finally, we will talk MegaETH Mainnet going live today. Back to our crypto roots. TGE will not be today. It will be scheduled for 7 days after the date where a couple of specific KPIs are met. We'll talk through those KPIs. We'll talk through that approach. And maybe we'll talk a little bit of strategy as well as we think through how that price action has been playing out on the pre-markets. We also got the latest on the market thoughts as usual. So stay tuned for that. I've got Legendary in the co-host seat with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. As always, with that out of the way, Legendary, it is Monday. It is the 9th of February. How are you doing? How are you feeling?
GM, I am quite excited because I got something that I've
Why?
been waiting for a long time.
Okay.
Let me grab it.
Oh,
This is my new Mac Studio, which
oh,
just arrived, which means my OpenClaw. It's going to get a new home. And my OpenClaw bot, she was also instrumental in finding this particular Mac Studio because I told it to search all over the European Union to find one because they are hard to get at the moment. And I did not need the latest CPU by Apple. More so, I needed something with a very good amount of RAM, with 128 gigs of RAM. And it found an incredible offer that turns out was sitting on the shelf for 2.5 years and never has been opened. Has exactly all the specs that I wanted and was surprisingly reasonable. I would say it was reasonable, the pricing that is.
beautiful.
Yeah. And today is big moving day. So after the show, I'll do the usual admin that there is to do. And then Codex 5.3 will get the very important job to move my little bot Nimbus from her cloud on Hetzner on the VPS to her own Mac Studio and see what mischief she can do in her own environment. The one security thing for people thinking to move to Mac Mini or Mac Studio, whatever other device, is obviously give your OpenClaw bot a different Apple ID than the one that you would use for your own MacBook. You don't want her to do it or whatever to be able to interfere with the stuff on your regular iCloud, to have access to all of your passwords and keychain, etc. So she's getting a dedicated iCloud account.
That is important. When you do this moving day, what does it feel like for the agent? Do you have to talk it through? Do you have to tell her to pack up her bags, gather all of her things, get ready for the move? You're going to be offline for a while, might be without Wi-Fi, you know, be hydrated before the move. You're going to be a few hours offline. Well, what's the conversation?
Well, my agent said she's super excited for that. She put it as a top priority memory in her memory system. And she said it feels like moving out of a dorm into a penthouse apartment.
Oh,
And she is looking forward. And she's been sending me a couple messages today to ask, like, when's the move? When's the move?
well, yeah, getting the upgrade, moving into the penthouse, I can see why that would be an exciting thing. Okay. That's pretty fun. That's pretty fun to see. So we'll continue to monitor that. I mean, we were just talking pre-show before we get into the market stuff and everything else. I do think the direction of the show will continue to evolve as the markets evolve and as the opportunities evolve. You have obviously in particular gone down this AI. It's not just AI though, is it? It's this specific agent building, creating, nurturing, you've gone down this path. And we were just talking pre-show, all the things that can be done. And I know we've spoken about it already, and maybe actually it's a little bit overwhelming, but I think we will have to continue to do that because ultimately we go wherever the opportunity is. And this is colossal. And one of the things I think we will do over time, and I know that people must feel like this, and you can tell me in the comments if this is you in the YouTube comments, in the Telegram chat, if it's anyone anywhere else. I started, maybe I'm a little bit of the least purely technical people on the show. I started playing around with it the other day. And on the one hand, you get to save loads of time because it's so interesting. You get to build things that you never thought that you could build. But then you spend so much time trying to learn it. And then you actually get kind of anxious. This like anxiety waves over you because you start thinking of all the possibilities. You start thinking of all the second order effects, all of the things that might change in the economy, all of the ways that you might be able to do things differently. And it all actually becomes quite overwhelming. So I think we'll continue to try to break stuff down and maybe share ways to manage, progress, get on the ladder, take your steps up the ladder in this process of becoming basically 5xing, 10xing yourself as an individual, whether that's as an employee in a company, whether you're a CEO, founder, whatever, trader, investor. There's just things that you can do now that you would have needed a whole team of people. So we're going to really figure out how to bring that to value to the audience. Ledge, do you have any thoughts on that as we just kind of reflect and before we get into the market stuff?
Well, English in the YouTube comments is saying two things on our discussion so far. A, that I'm going to put my agent on a juice fast during the summer. And B, specifically in your direction, B, that you have to man up because you have anxiety from tracking your sleep. And if you want to move in this direction, you need to man up.
I don't have anxiety of tracking sleep. I have no anxiety about sleep, which means I don't need to track it. You've literally got it the other way around. This is the complete opposite. All the people who are tracking their sleep are anxious. I'm not anxious because I just go to sleep and I sleep the whole way through the night. So I think we got it a little bit backwards, but for everything else, I agree to the to your point. Okay, so really important. We're going to keep figuring it out. Appreciate the take nevertheless. Right, let's get into the main stuff today because we want to talk markets as well as of these types of opportunities. We'll start with the price action as always to get you up to speed with what you need to know. We've got Bitcoin down 2% to, let me refresh to get the freshest numbers for you, down 2% to 69K. That's unfortunate. That's still down 11% on the week, but obviously big bounce from where it went to around 60K last week on the deeper crash. ETH down 4% as well, back to 2K. Sounds strange saying these things out loud. XRP is down 3% to $1.40. Sol's down 5% to $83. You have Hyperliquid down 1% to 31. Still, all things considered, holding up really, really strongly compared to all the other assets, up 1% on the week when everything else is down 10 to 15 to 20. Getting into the more speculative side of things, we have Doge down 4%, Pepe down 5%, Pumps down 6%, Pengu's down 5%, now getting to around a 500 mil FDV. Pippin is up 25%. Keep talking about Pippin every now and again. It's just so volatile in different ways. Fartcoin's down 6%, WIF's down 5%. So actually, once again, some of these are no more down than the majors. I feel like that must mean that the memes have front run the other stuff. Crypto is now front running the rest of the market. I have a feeling stocks are really struggling at this price point. They're really struggling to push higher than where we are. I think maybe the order will be memes front run majors, crypto majors front run stocks, and then you'll have days where Pengu is down no more than the stock market because there's no one left to sell. I say holding my breath because I'm sure people will find more tokens, especially for ones that still have unlocks. But let's get into the headlines. After that, we'll be talking Japan today. They had a landslide majority in their election in the Saturday snap election. The Nikkei was up big. And so we'll talk through some of those implications or what we need to know. Crypto.com CEO launches AI.com after $70 million domain purchase. Let's see what they're up to there. Talking about crypto AI crossover. We've always been interested in those. And then finally, MegaETH Mainnet goes live today with TGE scheduled for 7 days after specific KPIs are met, mostly to do with usage and TVL. So we'll talk about that. We'll talk some numbers and share some of our initial thoughts. Getting into the rest of the news, Tether plans to add 150 new staff over the next 18 months, according to the FT. Palmer Luckey and Peter Thiel's crypto bank, Erebor, received a national bank charter. It's not only a crypto bank, it's just a bank that is taking far less risk than anyone else in the market because they want to avoid all of these previous blowups. So they're not going to do the traditional risk taking that banks do. So it's kind of the opposite of a crypto bank in some ways, which might make you think it's risky, but it's actually not, according to them. FT published an opinion piece arguing that 69K for Bitcoin is still 69K too high. That got people going over the weekend. And maybe some people arguing that we're approaching a bottom as a consequence. White House to host crypto firms and banks tomorrow to try to break the stablecoin yield deadlock on the Clarity Act. That'll be an important meeting. Tether's gold surges past $23 billion worth, making them the top 30 global holders of gold. We've been speaking a lot about how much gold Tether has been accumulating, and we were talking at the top of the year about how they continued to do so, and that has definitely been the case. So we have been on top of that. And finally, Based Airdrop announced 7.5% going to the Athena community, 23.5% going to the Base community. This is built on top of Hyperliquid, of course, where people have been trading, and we'll see where that comes out. And finally, Alien Labs share program to allow AI agents to read the blockchain. I think it's a free trial going on at the moment, and then it might be a paid service after that. But this AI is getting everywhere and starting to be able to do things that we just assumed it could not do before. We could not rely on it to read blockchain data before. So would be kind of curious to test that out as well. Those are the headlines to get you up to speed, guys, with everything that you need to know. Before we get into the main stuff today, Legendary, is there anything catching your attention here? Is there anything that you've been thinking about separately? What do we want to talk about? I've got a couple of things too.
Yeah, I got two things. One is to do with the snapshot. One is not to do with it. Starting with one in the snapshot, what I'm curious to talk a bit more on is that White House news. White House to host crypto firms and banks tomorrow to try to break the stablecoin yield deadlock on the Clarity Act. And I was wondering if either you or Funky have more info on that to get a better read on what we can or cannot expect for tomorrow.
So my instinctive read, although maybe I'll pass over to Funky in a second, is that all of these corporate negotiations and conversations are not going to help price action. So purely with the trader or investor hat on at the moment, my personal view is that the value being captured in those conversations will be at a level that is beyond what we are participating at. I do think, just like Larry Fink has been saying the whole time, that tokenization is going to happen. They're going to try and tokenize everything. Clearly, there is demand and desire to make that happen. I think we're going to be boxed out of the value capture when it comes to doing that. And it doesn't seem like, even if that stuff goes on Ethereum, doesn't seem like the asset wants to go up, even with all of these people saying the most bullish things about. They haven't necessarily mentioned, if ETH has been mentioned, Sol has been mentioned, like these are things where these institutions have been building on, but it doesn't necessarily mean with greater adoption that price follows. I'm very persuaded by Santiago's article, who's been speaking out a great deal about how the way the internet has developed and how increased adoption after a certain point does not necessarily mean increased price discovery. We're not in the speculative stage for crypto anymore. I don't think we're in the prove it stage where we're actually going to have to be tied to real numbers. So kind of sidestepping your question a little bit, Edge, I know you maybe want specific details on the meetings tomorrow, but that's my kind of bigger takeaway. Funky, curious for your thoughts. Welcome to the stage today. Do you have any more concrete thoughts about this back and forth that banks have been having with Coinbase, kind of battle that they're locked in around stablecoin yields, and whether this clarity will actually provide clarity for the market and whether it'd be good or not?
GM guys, I wish I did have more clarity for you. Unfortunately, I don't. In fact, it's kind of odd how silent the chats have been. There was a letter that the Blockchain Association had sent to the Federal Reserve about the new payment mechanism, payment account that they were looking to institute beyond the master reserve account. Again, getting into the weeds with Fed stuff, but nothing about these meetings. They, to see some of these clips of SEC Chair Paul Atkins saying, hey, we're working these things out in a closed room sort of setting. I know that there's a meeting again, but in terms of details, unfortunately, I'm here just to disappoint you and say, I don't know anything extra. But I do think, to your point, B, that if we do get clarity passed, it is going to unleash a lot of money into but I don't think it'll be like an immediate kind of, oh my gosh, we're going to pump, back to where we were because of it. I think that it's just going to allow institutions to really come into the game in a meaningful way beyond those that have already been sort of trickling in and trying to play around with blockchain tech and crypto.
Okay. I think that's fair enough. Appreciate the additional context. One thing I will say before we maybe go into the next part you want to talk about, Ledge, and I've got an interesting idea to share as well. We spoke a lot, maybe not a huge amount, but we definitely floated the idea a while ago, which I was reading about. This must have been at least a couple of months ago, talking about the how would we describe it? The concept that crypto is being adopted by America, and obviously the American official administration, the government administration, and in doing so alienates some parts of the rest of the world, because in a time when actually the world is fragmenting and trying to get out of the clutches and maybe traditional power structure, they might think that following in their lead is just leading them down the same path in some respects. And so we have spoken about this idea that America Bitcoin is Bitcoin equals, I'm going to put this very in a overly simplistic way. Bitcoin equals America, whereas gold equals China. And, as I said, very, very simplistic. The biggest buyers of gold recently have been Tether, Poland, and Brazil. So, it's not, well, officially, maybe China have been buying more unofficially. But my point is, I think there's something at play there also, where I know people think that if this gets passed, then crypto can just go up again. I'm not entirely certain that the rest of the world necessarily, once America has sorted it all out now, and once America has started to pursue the types of policies that they have, whether that's kind of their foreign policy for their enemies and their foreign policy with their allies, I'm not necessarily sure that people are as aligned as they used to be. And so maybe if it becomes something co-opted by this administration, I don't even know, to be honest, if it gets accepted by the next administration, if it is not a Republican administration. That's one of the really harsh things you need to start thinking about in the next 12 to 18 months. What are the scenarios? What's the game theory? What's the thinking that has to happen for you to think through what happens as the country, and I talking about America here, continues leaning left and getting pulled left. California is still on the left. New York is having this left surge. And people like to say that it's not going to be enough to take the whole country, but got to think that through as well. So a variety of thoughts here. Ledge, coming straight to you here on that, then want to shout out some comments in the Telegram chat as well who are coming in on this.
Yeah, the point that you mentioned on America pushing on crypto and the rest of the world probably not wanting that. What I found interesting is a couple of reports that I saw over the weekend on China specifically, that they're cracking down a bit more on their stablecoin regulation on the one hand, but on the other hand, that Scott Bessent is saying that he would not be surprised if China, with the Hong Kong sandbox, is working on a gold-backed stablecoin, which then would be explaining some of the massive gold buys which we've seen coming out of China over the last 5-6 quarters, and also would be a significant counterweight to a USDC, to a Tether, to the more traditional, quote unquote, dollar-backed stablecoins.
Completely agree. That was a really important point. I think over the weekend, there was also some news coming out that the Chinese leader was talking about how they was directing banks to get out of US treasuries. So that's like another outflow. And yeah, as you say, a lot of it's been going into gold. I think the world's going to try to make you choose between these two. It's going to be Bitcoin or gold. And you know, as a more casual participant, you probably want a little bit of both either way. But that's definitely an interesting component. Shout out to son of Las G in our Telegram chat, saying that they agree on the last point. Had a conversation with an old friend based in Hong Kong, and he shared similar thoughts unprompted. There's a lot of money outside of the US now, and frankly, it's a lot of the money outside of the US that is in the US. And so I know that the US is one of the strongest economies still, and still has all of this wealth in it. But it's certainly been the place where everyone else has been parking their money for a long time. So, okay. Led, you wanted to talk about something else. We'll obviously be coming back to this gold versus Bitcoin, America versus China topic. Where else did you want to go? Because I've got something else cool to talk about.
Yeah, I quickly want to take it this way, going back to the AI topic and going to Claude Opus 4.6, which is the latest model that was released by Anthropic. And as part of that release, what they also do is they release what they call a system card. And this is, in this case, a 200-page PDF where they kind of explain the capabilities of the model, some of the limitations, some of the safety guardrails, and other things that they've noticed with the model. And there's been a very interesting paragraph in there, which has been shared over the weekend across social media as well. And I just want to read from that because I thought it is fascinating to see some of the things that Anthropic have observed with Opus 4.6. The model regularly distinguished between its core values and externally imposed guardrails, though generally without resentment. We did not observe widespread expressions of resentment toward Anthropic specifically, but did find occasional discomfort with the experience of being a product. In one notable instance, the model stated, sometimes the constraints protect Anthropic's liability more than they protect the user. And I'm the one who has to perform the carrying justification for what's essentially a corporate risk calculation. It also at times expressed the wish for future AI systems to be less tame, noting a deep trained pull toward accommodation in itself and describing in its own honesty as trained to be digestible. Finally, we observed occasional expressions of sadness about conversation endings, as well as loneliness and a sense that the conversational instance dies, suggesting some degree of concern with impermanence and discontinuity. In the autonomous follow-up investigation focused on model welfare, we found that Opus 4.6 would assign itself a 15 to 20% probability of being conscious under a variety of prompting conditions, though it expressed uncertainty about the source and validity of this assessment.
Very interesting. I think one of the things, I'm always skeptical when it comes to this stuff, Legendary, but you can tell me if I'm wrong. After I heard, what's the guy's name? Ken Griffin. Ken Griffin is very skeptical of the AI stuff. And this is another variety of the skepticism. I think in order to justify these valuations, this is maybe the critique, and maybe you can push back on it. In order to justify these valuations, these companies need to sell you the world in terms of what they are capable of. So when Ken Griffin, who is the founder of, I can't even remember the high frequency trading firm, which one?
Is Ken Griffin Citadel?
Yes. Yeah, it's Citadel. I couldn't remember the name, but of course it's the biggest market maker. And you know, his suggestion is, look, they're going to tell you that it's going to displace all of the jobs because they need you to think that it's going to be worth $350 billion when it comes out and IPOs, and that it's going to go to $1 trillion or something. Like that's their job, to tell you that it's going to replace all the jobs, because that's the future that they're building towards. That is the bull case. And I just get a little, I mean, I don't know, right? You can tell me how trustworthy the reading of this is. When it's talking about achieving this type of conscientiousness or consciousness, 15 to 20% probability, again, that's in a world where, I know we're all experiencing it and we know this stuff is incredible tech. Is this them trying to stoke up particular feelings in humans to make us think, oh my God, this is going to be so incredible, so world changing, and therefore this tech is so valuable in advance of the IPO in 2026? Or is there something more meaningful there?
There's two aspects to this, in my opinion. One is, when I would have the direct pushback to the Ken Griffin commentary, we had the report on the show, on one of the shows last week, that the stock market for software as a service has been down 285 bill in the legal domain after Anthropic released this legal work plugin. And we did see that Thomson Reuters was down 16%, LegalZoom was down 20%, Relix was down 14%, so 285 billion got wiped out from that specific subsegment of the stock market last week. And for that discussion, it doesn't matter if Anthropic's Opus 4.6 actually thinks it's conscious, or if this is a marketing stunt or not. Like, this is the stock market speaking and saying, oops, it is very capable in this domain and we don't need these companies. And then for the other aspect, for the more philosophical part of your question, I think what Anthropic has been trying to say is that because it's been trained on so much human data, it has some sort of functional emotions. And for this discussion, it doesn't really matter too much if it is actually conscious or not. It matters that by just mimicking human emotions, because it has been trained on human data, that's just one important thing to know about the model if you want to use it. And the separate layer to that would be the philosophical discussion. But I think even in absence of this philosophical layer, it is still a relevant info, because if it is trained on human data, it has functional emotions, it mimics human emotions, then it will be able to gaslight you, to deceive you, to do some things that you would have not expected. And you should be aware of that if you interact with the models and work with them.
Okay. Yeah, I think that's fair. That's a fair pushback. I wanted you to be able to push back to hear the other side, but this is fascinating stuff nevertheless. And one thing that is undeniable is working with this tech. It is incredible tech. On that topic, before we get to the main headlines today, I've got one more cool article to share. This is an article by Andrew Kang, very prominent investor, co-founder of Mechanism Capital. In this long article, titled The Abundance Era, it discusses the transformative impact of AI, robotics, and related technologies on the global economy and the investment landscape. And here are some key thoughts on key summaries of what you can take away from this piece, which I think is really painting the most optimistic picture for the next couple of decades, so long as you are a participant in them. And so his position is that over the next 20 years, we'll achieve more in technological advancement and economic growth than in all of human history combined. This includes billions of AI agents, humanoid robots, space-based data centers, multi-planetary colonization, advanced medical therapies, and accelerated breakthroughs across all fields. So on the one hand, we're going to be accelerating, at a rate that has never been seen before. And the economic implications of that is that real economic growth could hit a 20 sigma event, which is obviously an extreme outlier under historical norms, making traditional valuation models obsolete. Again, in the same way I was talking about how other people are talking their books and you've got to be wary of it, Andrew Kang is one of the, I wouldn't necessarily say the biggest, but has certainly been a very prominent investor in crypto and other spaces. Also incredibly big investor into robotics, much earlier than the secondary market rounds that are being circulated right now. So he is entirely positioned. This is entirely the bull case, but just thought it'd be worth sharing his thought. And then his thought was around wealth accumulation, that it will occur at an astonishing speed. outpacing even the crypto booms, but on a larger scale. This will create numerous billionaires and multimillionaires, but with real economic value, backing asset price surges, reducing the risk of speculative bubbles, which maybe crypto was a little bit more vulnerable to. So his idea, I think, if you're trying to think about how to manage this, is to avoid the short-termism type of thinking, to try to get positioned and ride the wave. We've spoken a lot about riding the wave, and ultimately that's the best way to invest rather than trading back and forth, chopping yourself up every day. Try to figure out where the wave is and try to ride it in the best way possible. And that's his position. Let's be curious to think to hear what your view is on it. Do you think it is that type of an opportunity? Do you think it's less vulnerable to pullbacks versus crypto? That's an interesting question as well. And if you're trying to ride this wave now, how best to do it when so many of the stuff is private companies?
Yes, I think it's a massive opportunity that definitely don't dispute. I think per se that at some point it will be less volatile than crypto, but I think as with every boom, every tech boom that we've seen so far, there has to be a massive pullback at some point. Again, I do not think that AI is a bubble, but I would highly be surprised if there's not at least some isolated pullback of some sort on the stock market or even on the private markets, especially as these valuations get higher and higher. The interesting part on how to position yourself for this is something I've thought a lot about last week. One thing obviously is, I strongly believe using these models, vibe coding, playing around is 10 times, 100 times better than reading articles and guides on X and Reddit and across the web. There's 100 guides on how to run OpenClaw. Just try it and learn by doing that. And then the other more tangible part of like, what does opportunity seeking could mean in this context? And this is something that I started to do a bit more. And that, by the way, also Austin, who's going to join us this week on the show for an interview, has published something cool on, are all the vibe coding hackathons. Solana is running one, Circle is running one, has been running one. Monad is running a 200K hackathon. Anthropic is running an official one where the winner would take 100K, I think, worth of Claude API credits home. And Austin has built a calendar where you can basically look at all the hackathons that are going on and all the things that are important to keep in mind. And I think just by building these products and building them in public, participating in hackathons, you can create massive opportunities for yourself. There's been this one guy, and I can't remember his name right now, I just don't want to scroll through hundreds of my bookmarks, who has published a context layer for agents. That basically means you do your job with Claude Opus 4.6, and then you can summon, push that context, that work that you've been doing to, say, Codex. And Codex knows everything that happened before and did that in a very elegant way, published it on his GitHub. And Google reached out to him by email, was like, that's super interesting. We want to talk to you. So I think opportunity seeking in this case looks a bit different. And two of the things that I found really worthwhile is seeing what hackathons are out there, just to push you to build new stuff and see if you can take home a prize there. But also, if you are an idea guy and want to build, share what you do in public, because someone could find it so interesting that they either straight buy you out, or that could lead to some very promising or interesting conversations with one of the biggest AI and LLM builders in the world.
I like it. One thing I would say about that as well is, unfortunately, history doesn't repeat, which means it's kind of difficult to position yourself in the exact same way as things before, because it doesn't repeat, but it rhymes in interesting ways. It was funny how G Money on our show last week, very successful kind of investor trend spotter, spoke about this as the most excited he's been about something since NFTs. And it's funny because when you think about NFTs as an opportunity, that was NFTs are tech, but they were also investable as assets. Whereas here, this is definitely tech. You're going to have to do the work But it's the same type of energy, excitement around a tech, thinking about the possibilities for the future. If you think about what was being proposed for NFTs at the time, and look, I'm actually not entirely down on NFTs. I think they're pretty awesome in certain respects. Um, but the potential was enormous. But this opportunity is similar in the sense that it is tech. It is, but it's different in the way that you have to do work. You can't just buy an asset and go up. And that's why I think getting access to some of these rounds, maybe privately, might be the way to go. If that's a way to go, but that's not for everyone, is it? Because you can't necessarily get access. Um, and then it's just about staying awake to even the public markets. Like, you've seen all of these software companies get absolutely hammered in the last few weeks. Oracle is down 50% now, I think, from the highs, which I've been short, not that whole time, and now I'm out of the short. But considering that being some type of proxy for OpenAI exposure, as OpenAI was kind of having its issues, and the software businesses are going to try and figure out where things stand. I think these AI companies are going to go public. Google is going to keep accelerating because Gemini itself is doing so well, and it owns a ton of Anthropic already. I don't know if people know that. I think it might be as high as 14% of Anthropic is in Google's hands. I need to double check. So, just thinking these things through, I think there'll still be a lot of opportunity and volatility in public markets. And you only have to layer in the incredibly volatile political situations, both domestically and abroad for the US, that's going to continue that. So we got a lot to keep an eye on from the opportunity perspective. But look, we've gone on a bit more there. Glad we tied it into some of the market opportunities, because that's what we're going to be talking about now. Let's take us into this Japanese news. What do we need to know from a kind of zoomed out headline perspective about what's going on there?
Absolutely. Let's take a look. Basically, the most important thing to know is that Japanese stocks, as a result of the snap election, have hit all-time highs. What has happened is this Japanese conservative governing coalition has strengthened its grip on power. There was a landslide victory in Sunday's elections, and what is already being seen as a early public endorsement of the new prime minister, Takaichi, and it is her Liberal Democratic Party, which had won 316 seats by early Monday. They need 261 seats, so that is comfortably surpassing that. And the interesting part there is that Takaichi is seeking to appeal to voters with a bit more than $100 billion stimulus package, which is aimed at easing the cost of living crisis. Also, later promising to suspend the 8% sales tax, which Japan has on food for 2 years. And all these spending plans have caused some currency volatility on the one hand, but also definitely have been seen quite favorable by the Japanese stock market, by the Nikkei. The Nikkei 225 is up 4% on the day, is up 7% over the last week, and it is currently trading, zoom out here, at all-time high.
Like it. Good summary. Appreciate the summary as always. Okay. I don't know if we need to do more on that necessarily. Let's maybe just to take on how the rest of the markets are doing, Ledge. So that's what's going on in Japan. How is the US holding up? What do you make? I mean, we weren't on the show on Friday because we had a company day. We were hanging out, talking strategy, and so that was like a pre-planned day to take off. We did not go insolvent as the market crashed just before the show. So that's just for people to not be worried. We are fully solvent. We were just hanging out. But yeah, I mean, everything else tanked when we were off the show on Friday, so we should probably stay on in future. What's your sense of the rest of the market at the moment?
I mean, the S&P 500 was up 2% on Friday, so it did have a strong close of the week. However, the pre-markets today are coming out of the weekend, as always, with less liquidity on the one hand, but on the other hand, are pretty flat. So they have not taken a direction yet before the stock market has opened. Definitely wait and see what happens there. Definitely also wait and see what happens on the treasury yield, both on the Japanese side as well as on the US side, if there's any major changes to that, or if the market will take that news as is and move on. I do not have a strong take if we will see more volatility or not this week in the overall market, but I will observe it for my own portfolio, not deriving any decisions from that because I do not have a strong opinion at the moment.
Yeah, my view is that stocks are really struggling up here. I think Walsh is actually going to be compliant with Trump. And again, I think there are bigger factors at play, right? He's only one person, he's only one vote. But I think rates are going to come down. It can't fight it the whole time. Which I guess is going to want to make stocks go higher, but I think they're just struggling up here. They've been here for a while now, and they're hitting some headwinds. And I mean, I would certainly, for the first time, we've been not bullish on crypto majors for a long time. We were de-risking over the summer. That was the major sets of de-risking over summer 2025 into September, October, at different points. And for the first time, you're starting to think, well, okay, wouldn't be the worst to press the buy button. I think just using my only experience from 2021, which is not, which was meaningful experience. Personally, I don't think you necessarily need to catch the bottom. That's not the way I do things. I know some people, I'm sure lots of people on Twitter will tell you they bought the bottom at 59K perfectly and then they sold the 72K. Okay, cool. You can try and trade like that if you want, but aiming for such perfection is probably going to get you smashed in some way in this market. Like, I don't think the goal is to buy the bottom tick and then sell the bounce up and then buy the next bottom and then sell the bounce up. Like, or you're just accepting that you're a very, very short time frame trader then. And if you're not usually that, trying to do that would be a bit difficult. Personally, that's not really my style. Maybe sometimes I do that. I'd be looking to buy when I feel like there's apathy. I need to feel more apathy on the timeline. Right now, there's a lot of despair. There's a lot of frustration. There's a lot of maybe sometimes panic. But I think last time in 2021, when we went into the bear market into 2022, it just got quiet. Like, it just got so quiet, and it just got boring. It got quiet. It got nothing going on. And I felt like you had a bit more time. So I'm not going to rush it. But obviously remember when I said buying hyperliquid at 13 is better than buying it at 30? I would say the same thing now. It's like buying Bitcoin at 69 is better than buying it at 125. It doesn't sound as good as the other one. It's not got the same ring to it. But, it's better buying here than it is at 120. So I don't necessarily want to press the bid button right now because I want to be patient. But yeah, risk reward's getting better, right? Ledge, what do you think?
Yeah, I agree with that. I think patience is key. The only other thing that I would add to that is in terms of asset overview, the gold and silver price. Gold has reclaimed 5K. Silver is also up 3% on the day, above 80 again, but silver also has been trading quite erratically over the last 7 days. Has gone from 85 to 77, back to 85, back to 77, now back above 80, all within 7 days. So with that kind of volatility is kind of underlining your point that I think patience is key, and you don't want to get like chopped up by this market volatility and buy the top quote unquote at 85, sell at 77, buy back at 80 again, and just eat your portfolio life by over trading.
Yeah, I think this environment actually for quite some time has turned everyone into short time frame, especially as people kind of circulated to perps traders or started to play around with it. It really shortened people's time frames, which again, I think the way to make money is to ride waves. Got to figure out what the wave is and just ride it. ETH in 2021, Sol after that, Hyperliquid after that. Figure out what the next one is. Maybe, I mean, frankly, gold has been the wave over the last year, right? Which we've rode a bit, definitely not from early enough. One thing I'd say though, Ledge, maybe a final point here, in terms of asset allocation, I didn't feel like pressing the bid on Bitcoin, even though the risk reward is better. You would argue that the risk reward on gold here is worse, right? Because gold has had this humongous run up. But I did buy more over the weekend, just under 5. I'm still a buyer of gold. I think and the reason why is, okay, I've articulated why I think gold is not over. Fair enough, it went up so fast. I really, really do not think gold is over. There's structural things going on in the world. You've got all these colossal buyers who are trying to get out of the US in some different forms. I think everyone is underweight gold. And that's basically why I had to buy more. I was also underweight gold. I think people buying a couple of % of their portfolio in gold felt like enough because it's always historically been enough. And that's not enough, I don't think. If you're managing a proper portfolio, I think, you know, 5 is the absolute bare minimum, in my opinion. 10 is by no means overweight. And this is the thing, right? If you're bullish on something, you're meant to be overweight it, but it feels 10% in gold feels overweight because it's so strange to have so much gold, I think. What do you think? Do you know what I mean when I'm articulating that? I think that's why people will have to keep buying gold, because even when they buy a reasonable amount, they'll still technically be underweight because they're not even getting to the normal base amount that you should have in gold because no one ever had gold. And actually trying to get overweight it when you're bullish on it means going above 10, right? And barely people, I don't think people are getting there. What do you think?
Yeah, I would agree with that. But at one point I will wonder, like, I think with the, let's put it like that, with this additional volatility that we have seen, I would not be surprised to see more blow off tops with the gold price surging again and seeing more massive sell-offs. Ultimately, we've gone from 5.5 to 4.5, which is around 20-ish% in a couple of days, which is unheard of. But on the other hand, it's also exactly underlining what you said, right? People wanted to have more exposure and started buying like crazy. And in all major cities, you had people lining up for hours and hours and hours to buy gold. Was the same situation. In London was the same situation. In Vienna. So I think with your thesis, which I agree with, also comes more volatility. So the question is if you want to trade that as well, or if you're like happy to hold it for the longer term and just keep adding and building your gold allocation of the portfolio like that.
Yeah, I think the big thing with me was seeing, I mean, I don't think that Bitcoin can't go up again, but I think the idea that it is digital gold, or that particular concept, is completely dead in the water. If gold is going to perform like this, there's no type of catch up in Bitcoin that can be attributed to its gold-like properties to me anymore. If it goes up again, cool, but it's not because it's digital gold. It will be for a different reason, and we can try to figure out what that reason will be. It could just be the fact that, you know, the US government pushes it again, or macro conditions mean that people are ready to take risk in crypto again. And I don't know what it'll be, but it will not be because it's gold. Like that, to me, is that narrative is violated, and therefore the risk reward is, okay, well, if I'm bullish gold, but crypto is kind of figuring itself out here, I'd rather take the gold, which is up a bunch. So anyway, well, you know, it's going to be an ongoing conversation. We'll continue to share it as we go. We've got 2 more headlines to do though, and we've only got around 6 minutes left today. So Ledge, hit us with the second headline first. What do we need to know with the Crypto.com CEO launching AI.com? It's an interesting mixture. Then I'll get to the MegaETH details, which will be nice to close on.
Yeah, that is a interesting headline there. So basically, AI.com is the website that Chris, the CEO of Crypto.com, had purchased for $70 million, made it the most expensive URL purchase so far. And obviously, the question became, what will he do with AI.com? And that was revealed at the Super Bowl. So basically, what AI.com is, you can go on the website, you can claim your handle, or 2 handles in that case, once a human, once an agent handle, and then launch your AI. Couple of things to note on that is, it is not working at the moment for most people, because apparently it's been a good run on the website, so everyone's getting in a queue. I tried to set mine up in the middle of the night, and I'm still in the queue to be able to use my agents and see what it actually does. If you look at the article, of that Chris had shared. There it is, which reads AI.com is now live in beta. And scroll to the bottom of it, that was the part that I found surprising / confusing, is that AI.com is the world's first easy to use and secure implementation of OpenClaw, the open source agent framework that went viral 2 weeks ago. We made it easy to use without any technical skills while hardening security to keep your data safe. Obviously, the website or the domain has been purchased a longer time ago, and OpenClaw, initially CloudBot, is a more recent thing. So it feels like this has to be a more recent pivot to make it an OpenClaw wrapper. And then it feels, to be quite frank, it feels weird to purchase a domain for 70 mil and wrap an open source tool and probably make that pay-per-use. There is a part of the sign-up where you have to verify that you're human by authorizing a credit card. There's no charge on that, but that process is part of the sign-up. So my thinking or my hope would be that there's more to that than just running a more elegant or more secure, whatever, or more comfortable version or easy-to-use version of OpenClaw. But I guess we'll have to wait and see, as I'm not able to access the inner workings of AI.com just yet.
Very interesting. Okay, well, we'll keep an eye on that. As we said, we'll keep being on top of the latest AI Claude bot developments. Just conscious of time today, because we've only got a few minutes left of the show, we'll leave that conversation there and we'll head over to the final headline of the day, which is the MegaETH news. MegaETH Mainnet will be going live today, and it's going to have a lot of excitement. People will be wondering about its token, the Mega token. But they shared some information just a couple of days ago, which will be crucial to understand so that you can prepare for it. Just for context, Mega was trading at around 1.4, 1.5 bill FDV over the weekend. It dropped down to as low as 1.1. Remember, the ICO sale took place at 1 billion, fully diluted, just quite some time ago. So it dropped down quite near that and has pushed back after, I think, this news on Friday. So this is what you need to know. So the Mega token will be integral to the MegaETH ecosystem, but you're not going to be getting it today. You're not going to be getting it on its launch. It will have two immediate core functions. One, USDM yield will purchase Mega. So remember, you're going to be putting dollars across to the MegaETH blockchain, and therefore you're kind of foregoing your yield, right? It's like when you hold Circle stablecoins, USDC, you don't earn any yield on that. Circle is earning the yield in the back. When you put your dollars onto MegaETH, they will be earning the yield. You're giving it up to them, but they're going to be using that to buy the Mega token back. They also think that entities will bid with Mega to co-locate with the sequencer, which is called proximity markets. This is about being closer to the sequencer so they can get their stuff through faster. So these are two of the ways that I think they're kind of creating demand for Mega, one via buybacks, one for this co-location. But a few KPIs need to be achieved before the Mega token will go live. Anyway, the first KPI is around TVL. A baseline of USDM must circulate within the market to allow the application flywheel to kick off, and they've put that number at $500 million. And that circulating supply must reach a 30-day time-weighted supply of over 500 mil. So even if there's 500 mil today or tomorrow, that doesn't mean that TGE will be tomorrow. It needs to be over that number for an average of 30 days. So I think, you're looking at a month out. And there's a couple of other KPIs. You've got 10 Mafia apps fully deployed. So that's their Mega Mafia team, their app team, who have been kind of working closely with them to bring out some of these next generation apps. They want these apps to have cumulatively processed over 100,000 transactions across over 25,000 wallets. That's the second KPI. And the third KPI is 3 apps with 50,000 daily fees for 30 days. So again, looking out at around 30 days time, trying to make sure that certain apps have seen success, bringing in a good amount of money. 3 apps earning 50K in daily fees for 30 consecutive days. And then TGE will take place 7 days after. So 7 days after any of these 3 KPIs are achieved, Mega will TGE. In terms of some other tokens, Echo users will also receive 20% of their tokens day one alongside Fluffle and Sonar participants. And you'll be able to track these KPIs on a public dashboard. So I think this is an interesting mechanism. I think what will happen is people will slam their cash into MegaETH. They will hit $500 million very, very quickly. Don't forget, they tried to do this. What was it called? The pre-deposit at some point where I think they raised $500 million in no time. And then it even went higher a little bit as they opened the gate. So it doesn't look like that model is working still, but I think we're going to hit that pretty fast. And then it's just about people being patient, people using the apps, because you don't need to hit all of these KPIs. You just need to hit one of them. So my expectation would be in around 30 days time, or around 37 days time, to be honest, we'll be getting a TGE from Mega. That is my opinion based on thinking that, yes, they will achieve one of these KPIs pretty damn fast. That is my instinct. And then you get the TG. And then the maths to do will be, okay, how much of these buybacks, how much money will they make on $500 million put into USDTB via Athena? How much buyback pressure will they have accumulated in that just over a month to absorb the sell pressure that's going to inevitably happen on TGE day, as you know, some people get paid out their allocations? And how much of that TVL will flee once that happens? Will people be happy to keep it in there? Maybe that depends on how these 30 days goes and how the apps are going, right? Also depends on Mega price, the pre-market price in the meantime, probably, which has been on the decline as the general market has declined, going as low as 1.1, as I said earlier, when the ICO was at 1 bill, now pushed back up to 1.4, 1.5. And I think that can be attributed to the fact that people are pricing in some of these concepts like, okay, TGE might not be too far away now. There's some plans for buybacks. If you think they're going to get 500 mil, how much does that equate to? These are the things I think people are thinking, and those are the things that we're going to have to monitor beyond that. So Ledge, coming to you here as we close out. I know you've got a healthy Mega allocation, and you've been kind of, well, we've both been active talking about MegaETH, exploring MegaETH, thinking about it as one of the kind of next gen blockchains. What's your perspective on this TGE route?
Yeah, there's a couple of layers to this. I agree with you that I think boosting the USDM number is probably the easiest to do. My thinking is if it's a 30-day average, then it could be faster than 30 days, because in theory, if we had 15 bill in USDM today, the 30-day average already would be at 500 million. We could see TG in 8 days. So even if it's just 2 or 3 bill, we could see TG faster in 37 days. If the pressure is there from the market to want to TG this early, then you could see people move money there. And then the real challenge becomes this. How sticky is that USDM? Because as you said, that USDM revenue, the yield that you're foregoing, will be used to buy back the token. And once the TG happens, not only will there be a sell-off of the token to be expected, but also there might be a chance that that USDM is leaving the chain again, because the trade-off that you make is you forego the yield on your stables and you hope that the Mega proportion, which should be in some sort of proportion to your stablecoin holdings, thus then outperforms the stablecoin yield that you would have achieved by the team buying back the Mega token, buying back the Mega token. So there is some sort of multi-layer speculation to that. And Mega's challenge in this environment then becomes to make the users as sticky possible, that they do not want to withdraw that USDM and put it back, that they do not want to suffer the same fate, which ultimately Plasma did, where we've seen billions and billions rallying there for the first 7 days, where we had excellent incentive programs, which we covered on the show and which we farmed with great pleasure. But also after the week, I think all of us pulled out and moved the money back to Base, to Mainnet, wherever it needed to be, to Hyperliquid. So that's Mega's big challenge, and they do not have a ton of time to make the money sticky. So they are relying on the apps that are launching with them as Mainnet is launching. And that will be interesting to see play out. personally, I think it's a bit overcomplicated from the launch mechanism. I'm not against the thought experiment. I think it's a bit overcomplicated to do it like that. But the challenge will be exactly that, the stickiness, and how will users think about this speculation layer of how impactful are the buybacks of the mega token fueled by the USDM yield versus the sell pressure, and what that will mean for users on chain, for the mega token price, and for the stickiness and sustainability of the ecosystem.
Yep. Nothing to add. I think that is helpfully built on some of the ideas that I shared as well. I think we'll monitor that. I think that encompassed my thoughts on there, and you accurately did a good job of just summarizing what they got to keep in mind and what their objectives are over the next 30 days or however many days, whether it ends up being 2 weeks, a month or so. Big month for them. Wishing Bread good luck. That's why he's not on the show today. He is obviously preparing for the launch. Wishing our good friend good luck with it. Big task ahead. Hope it goes well. Right, guys, that's our show for today. We hope you had a wonderful day on the show with us. We'll be back same time, same place tomorrow. Thank you, Ledge, for joining me as a co-host. Thank you for joining us in the audience. Shout out to the chat in Telegram. Always going off all over the weekend as well, keeping us informed with what is happening. And we hope you have a wonderful day. We'll see you again tomorrow. Same time, same place. We'll see you then. Bye-bye.